Good morning, everyone. Today is April the 27th, 2021. This is StockCast, your pre-market show. My name is James Mason. With me is Todd Derby. Todd, how you doing this morning?
I'm doing fine, thank you. How are you?
I am doing well. So starting off pre-market, the Dow futures are slightly red at -6 points. S&P 500 futures are up 4.5 points. So we're starting this Tuesday morning, going sideways and pretty much flat into the market. And the reason why is because the FOMC meetings that will be taking place today and tomorrow. So we know how that can create all sorts of unneeded volatility. So guys, be sure to have those stop losses in place. And if you have profits, be sure to move those stop losses up to take them, because this market is going to probably get crappier than what it's already been for like the last month and a half. What are you doing, Todd?
Just moving some stuff around.
I didn't know you were holding a folder up in front of the camera. I didn't know if you like picking your nose or something.
Today is a red day.
Yeah. Oh, it looked orange on my side.
All right.
Let's see what we got going on. So we all know that Tesla had earnings yesterday, and they completely crushed their earnings. They beat them, and they showed that they had I think it's a 74% increase in revenue, and then Tesla just drops. So if y'all remember yesterday when we were actually talking about earnings and how I said that I don't play earnings because I suck at it, for one. The reason why I suck at it is because earnings are literally just a gamble. A company can report something that is just phenomenal and they'll get beat down, or they can report horrible news and they'll skyrocket. As we can see here with Tesla, they get hammered after their earnings and whatever. And Todd and I were talking about it pre-market and how a lot of people will try to say, oh, it's baked in. But we all know how Elon Musk is. He's not going to leak anything out. They may assume that the company, for instance, someone like Tesla is going to do something to a certain extent, but you can't really say that this stuff was baked in. To me, this just goes to show that earnings, it's going to do whatever the market makers want it to do. Nothing more. So playing earnings, and this is why I don't play them. Playing earnings to me is just literally like playing quarters. You're just flipping quarters, and if you win, you win. If you lose, you lose. So, Todd, do you have anything else to say about that?
No, I agree. And I consider myself to be a novice to trading. I've only been actively involved for a few years. That there's a lot smarter people who've been around, and earnings are a pure gamble. You look at Tesla; they announced a 75% increase in revenue, and in the after hours it drops 15, 18 points, and it makes no sense at all. And like you said, the numbers were already baked in. The only thing that's baked in is a perception. The only thing is baked in is a perception of what's going to happen, and then it becomes FOMO to the trading public. So, yeah, unless you're going to be a long-term hold, I think playing through earnings is, like you said, is a pure gamble, and we can have a lot more fun at Vegas if that's what you want to do. We can go there and have a good time, and there's probably a better chance of winning there.
Hey, you may not come home with money from Vegas, but you'll come home with something.
Yeah, glitter in your pants.
And so what we'll do, we'll tell our spouses, like, oh, Jeffrey had glitter cologne for whatever reason, and it got all over me.
Jeffrey, F. John, you know how the Hawaiian boys are.
Exactly, yeah. Like, I don't know.
We're trying to help them out, and they're like, come on, guys, come on, no.
All the Hawaiian guys in TT, they have that glitter cologne. I don't get it. Or glitter lotion. And,
yeah.
And they hug me.
I'm glad Jeffrey's not here this morning.
All right. So Lord Richardson said, but did Tesla only beat earnings because of the Bitcoin sale? To be honest with you, I have not even really dug into the earnings at all. That could be possible.
Yeah.
Could be possible. Let's see. Dan writes, but Tesla is still overvalued. I 100% agree with you on that. Not going to lie. I love Tesla, but I just feel like they're overvalued as well. All right. So good morning, everyone, for all those who are just now tuning in. And let's take a look at another one. This is going to be ticker CTIC. All right. Todd, so you know more about this one than I do. Would you like to go ahead and take this?
Yeah, so this is a ticker that I alerted here a little while ago, and I alerted it at 255 was my price alert. And then I've done one scaling at 240, so my average is 253. And I'm up literally 1% in my trading account on this stock. They filed an NDA the end of March, and they're waiting to get a PDUFA date, and they're hoping to get a PDUFA date delivered to them sometime in May. And what that means is that they'll be told their PDUFA date will be coming up. And if it's they will get a review date hopefully in November. These are all good. These are all positive signs. That's why the stock's probably had a little rally here of a few pennies. But I'm not looking to sell anytime soon. My selling zone is probably over $3 for this ticker, and so that's where I'm sitting with CTIC.
All right, and just kind of update everyone on the share structure. Last update for short interest on CTIC, 334,000 shares being shorted, so pretty much nothing there. Shares outstanding, 93 million. The float, 57 million. So that is what we are looking at on ticker CTIC. So there was another one I was wanting to bring up this morning, but I literally just forgot about it. I don't know. It's probably POAI. That's what it is. Yeah. Everyone, buy POAI. It's going to be like Amazon. You just need to go all in. Like, go get a payday loan. Go get a title loan on your vehicle. Whatever you can.
Yep.
All in POAI. So I'm just joking for y'all who are going to take it that serious. And if you do, oh well. All right. Let's see what else we have. Let's go through the comments.
Talk about CYCN. We talked about it yesterday. They had a conference call this morning, and I missed the conference call because we were getting ready for the show. But they didn't have bad news, but they delayed their. Yeah, I see that, William. Good job. They're delaying their data till the end of the year, which means that we trade around catalysts. So the run up to this conference call was good. And I was like almost 20% profit. I didn't take it. It wasn't, my selling zone was around 350, and it got to 325. And now I'm down 12% on that trade. So I have to make a decision. Am I going to cut it, or am I going to hold this through the end of the year? And that's something I'm not prepared to say right now because I don't know, but I'm going to process it. For me,
it's April.
What's that?
I said, shit, it's April.
I know. Well,
like, do they mean literally like end of the year or
fourth quarter? It'll be a fourth quarter decision. And that's what I have to dig in to find out the actual date, find out what's being reported on it. So for me, I mean, I've got a total, it's a $2,000 investment. So it doesn't affect my trading and what I'm doing. It just becomes a longer hold for me. So I'm literally right now at the current price of 240, I'm down a couple $100. So I could cut it and come back around to it, but I don't want to say right now because I want to do a little review on it before I make the decision.
All right. And that is ticker CYCN. So we got another comment. Let's see. This one is for ticker CCIV. How do we feel about the CCIV with the Apple partnership rumor? Benzinga said CCIV could lead the move back to the SPAC. Honestly, so when you have these run-ups like this is the same. These FOMO runs, it's literally the same setup for pump and dumps, because that's what a pump and dump is. It's just a FOMO push. So we can see it back here. It ran up on this daily chart and then just got crushed. Now, what's going to happen here is yesterday had a strong bullish day for it, and we're going to basically trade in between this channel of $20.18 on up to 36. So we'll probably have some green days in here, but really, I mean, we could break 36 again, but I don't see it coming up here and testing all of this at this point. Though I really believe that the whole EV craze is kind of dying down at the moment. It's not as hyped up as what it was, like say at the beginning of the year or at the end of last year. So really, I don't think these EV stocks are going to make those radical pushes like they were, unless of just some other catalyst for the sector as a whole really comes out and makes a strong push. So I personally won't be chasing this ticker. I mean, it is in a nice little channel that you probably could swing it back and forth. And that channel, again, is going to be between 2018 to 36. But I don't necessarily see it making like a big impression with the whole SPAC stuff. So that's just my personal opinion on Churchill Capital. All right, what else we got this morning?
Slow morning.
Yeah, it is. Let's see. Actually, I'm not going to talk about this one. It's an active alert. I will talk about, let's see, NVCN though. Let me pull up some information on it. All right, ticker NVCN. Last update on short interest, 2.4 million shares being shorted, 4.3% of the float. Shares outstanding, 67 million. The float, 55.7 million. So, okay, share structure. Let's see. On April 19th, I see a filing. Just skimming some catalysts off the top. Okay, don't see nothing too crazy there. All right. So when looking at this big picture on ticker NVCN on the daily chart, this is the setup that I like. Now, this setup actually works better on share structures that are a little bit lower than this. Again, we do have 67 million shares outstanding. It's not like a crazy amount, but you know, the lower the better. But we are sitting right at a dollar. And so what these companies will do, once they start breaking below that dollar threshold, to remain trading on the NASDAQ, they have to meet that threshold of $1. So this thing can dip under $1, and they have it just depending on what requirements that they're breaking. they'll get warned after a certain period of time that hey, you need to get back above $1. And so what these companies do is, what you really don't see is they pump their own stocks. You'll start seeing massive volume come into it. They'll release catalysts out of the blue, and then they'll shoot up over $1. Now, a lot of people like to say, oh, once they get under $1, they're going to be at risk for a reverse split. Yeah, but that's really just in the context of if they are actually going to get delisted if they don't do something. So they get their warning period, which is a pretty extensive amount of time to get compliant again. And then if all else fails, then they would do like a reverse split. Now, I don't foresee these guys doing one quite yet. Their last one was in July of 2019. But they could easily pull this up back above $1. They're not at risk. Now, if they get down to like 40 cents, they're going to really have to pull something out of their back ends to make this work. Yeah. But as we stand right now in this moment, I don't see nothing to worry about with like a reverse split. In time, they're going to do something, pull this thing back up, and it will probably just with the way this stuff works, and it always just seems to work this way. They'll drop a catalyst at the right time, pre-market or whatever, and it will break these highs right here around 258, go up to its next little resistance, which will probably be around 4, and then everybody will be happy. That's just the way it seems to work. Now, when is that going to happen? No one knows. This is why with these like longer term plays like this, and this would be like a longer term play right here with just how beat down this is. This is why I slowly scale into these plays, because if I'm scaling in right here around 140, and then if I add more up here around 231, and then it drops down here, I can kind of balance that average out over time. And then when they drop that catalyst and it shoots up, I'll either have my sell order in, it will hit it, or I set alerts all the way up. So that way my phone will start just going crazy. And I know it's time to start taking profits. And then the day that it like shoots up, like literally gaps up on the daily chart, I'll sell out for like a massive profit and then walk away. So again, that's why I scale into these things over a period of time. I slowly add some on here. Will it be a few thousand, 1,000, 100? It doesn't matter. It just really depends on your account size. And I tend to break my overall position that I want in these things up into 10 entries. So if I was going to take 1,000 shares total, I would only scale in 100 shares at a time, up to 10 times. If it spikes around my 4th entry, cool, no big deal. The whole point is not to, it's not to get up to 10 entries. You'd rather this work on less than having to max out.
It's managing your capital.
Exactly. So that's what I see for ticker NVCN, and we'll just have to wait. And what I mean by it gapping up, this is what I mean. At some point in the future, this is what will happen right here. You can see this, way back here. This is around the end of 2019. Whatever reason, it closed out this day at $3.93, and then this following morning, which it could have ran a lot higher pre-market. I can't see the entire pre-market picture here, but basically where the day opened up at, it opened up at $7.99, ran up to $8.65, and then just got hammered after that. This is probably what's going to happen. That's what I'm talking about with the gapping up. Now, when I say that, I'm not saying it's going to gap up to $8. I'm just saying in general, that's how it gaps up right here. So this is ticker NVCN, and it will have its day. So you just got to be patient and can't get over leveraged.
Let's take a look at ALDX, so our last one to wrap up. That was on the morning scan, the gapper, and they had some positive news.
And what would you say that ticker was?
ALDX, Apple Larry Delta X-ray.
All right, last update for short interest. 4.8 million shares being shorted, 12.65% of the float, and days to cover 4.1. So that's pretty nice right there. Shares outstanding 47.5 million. The float 37.8 million. Let's see. Over the last 2 days, meaning this morning and yesterday, looks like they were releasing some information pertaining to Catalyst in a Form 8K, so that will be worth looking into. And pre-market, we are currently up 22% at $13.56. So this dash line right here. Let me draw some lines out really quick. All right, so when looking at the daily chart, we can see this pretty significant gap up. So again, we're currently sitting at $13.55. And right in here is that really where the pre-market stop loss would be for me if I was already in this, but I'm not. To see any little sign of momentum of it breaking out of this pre-market channel, it would need to get above $14.67. But we have a pre-market high. I can't see it with that little thing covering it up. Pre-market high of right at $15.40. Honestly, I think this thing is going to just kind of trade around in this channel, and then at some point today, after it has a spike, just getting hammered down and then becoming a fader. That's what I see right here happening.
When you say a fader, what do you think it's going to fade off to? Where did you guess?
Probably back down around the high to mid 12s.
Okay.
Somewhere in there. But I would wait for it to make that push up in the open market, see if we can't hit this mid to upper $14 range, maybe a little bit higher. I mean, heck, maybe we can test this, but I don't see it breaking above that 1540 range. And then the bears are going to be all over this and hammer it down. And you can see why on the daily chart if you actually scale back and look at it. So we shot up here pre-market, tested this range, and it was just really too much of a move for this. People are going to take profits. The bears are going to short it down. And it's really just a overreaction on the bearish side. So the market's going to level itself out. And that's what it's just doing here today. So again, for this one right here, don't get caught up in this strong movement. I mean, if you are experienced, yeah, you'll be able to trade this within these channels without issue. But unless if they release a significant catalyst, I just don't see this thing breaking above, not anytime soon at least, breaking above 1540 again and staying above that and actually running. So we'll probably see it push up somewhere in here and then get hammered down and then fade to around the $12, upper $12 range, mid 12, somewhere in there. So that is what I see for ticker ALDX.
All right.
All right, Todd. So that is all I have for today. You have anything else?
I'm good. It's good morning. Thanks for tuning in, everyone, and sharing. And good luck with your trading today.
Yeah, absolutely. So everyone, again, FOMC meetings today. It's going to be volatile and just stupid crazy, like how it always is. So trade safe, trade small, so that way you can keep on trading and lock in profits if you have it, or at least move your stop loss up. So again, we appreciate y'all tuning in today, and we will see y'all in the next one.